Welcome, I am Ibrahim Sani and you're watching Baka Talk. Bank Negara Malaysia, Bank Indonesia and Bank of Thailand today jointly announced the launch of 3 local currency settlement framework, a move aimed at promoting the wider use of local currencies to facilitate and boost trade and investment in these 3 countries. All 3 frameworks, Rupiah Ringgit Framework, Rupiah Baht Framework and Expanded Baht Ringgit Framework, will be effective beginning January 2nd next year. This is in accordance with 2 bilateral memorandums of understanding on local currency settlement framework that was signed between the 3 central banks respectively on December 23rd last year. In addition to the launch of the local currency settlement framework between BI, BOT and Bank Negara, the Baht Ringgit settlement framework between Bank Negara Malaysia and Bank of Thailand was also expanded to include direct investment into enriching existing trade transactions between these 2 countries. The framework was first launched on March 14th last year. So to discuss this and more is of course Dato Kamaruzzaman Ahmad, the CEO of Kumpulan Wang Persaraan or KWAP, a good friend of ours at Sarawani. Welcome to the show, Dato.
Thank you for having me here today, Ibrahim.
I want to move from theoretical to practical. Do you think that these cash settlements in theory will work well in practice, in reality?
I think there are already a model that has worked actually for this purpose, among which of course is the European Union, where they have this kind of framework to work together and collaborate together, and probably it could lead to bigger things actually.
All right, let's talk about the bigger things that it could lead to. You were quoted by the press sometime this year saying that you want to increase the foreign investments from 12% to 15%. Do you think that initiatives like this, the cash settlement framework and many others, would see KWAP investing a lot more in overseas investments?
KWAP always has the aspirations of divesting more abroad actually. But this framework itself, just to be specific to you, I think it's just for these 3 countries and this region itself. I think in this region, I think we already are investing quite a lot in the Southeast Asia regions, covering listed equity, private equity, as well as on the fixed income space. But initiatives like this obviously help to facilitate more settlement. And on top of the settlement, there can also be other arrangements, which is actually a netting arrangements where you netted out your currency transaction and just to settle the balance. At the same time, of course, there is the possibility of ultimately coming up a closer monetary cooperations among these countries, which also could lead to actually a union, just like the European Union actually.
Dato, there is a major outlook that I want to highlight right now. The year-to-date major markets investment fluctuates between all the major markets in Malaysia. I have a graph here that we can highlight that may look very interesting for investors at large. Can we trigger that particular graph? And this particular graph shows that Malaysia is actually quite at the tail end of that graph. As you can see that on the right-hand side, there are major markets out there that does better compared to many other markets in Malaysia versus the rest. Does this graph worry you?
Actually, this is the first time that Malaysia has had a positive performance in terms of our equity market as compared to negative performance for the last 3 years. But this positive performance is actually one of the worst performing in the region actually. Even though we are very happy with the positive performance that's basically go against the trend of the last 3 years. But yes, I think Malaysia started very well in the first quarter when we were one of the top performers. But somehow or other, I think the investors' perception is still very poor despite positive GDP numbers. GDP numbers has improved 5.6, 5.8 and 6.2%, but nevertheless it does not translate into investor sentiment. Maybe the first quarter in particular, a lot of risk was addressed, especially global risk, and that led to positive investor sentiments. But maybe Malaysia itself has some risk coming ahead, and that is why I think investors are quite wary, and maybe due to the attractiveness of other markets, and that's why people are shifting from our markets to the overseas markets.
This is the idea of diversifying the investment markets that you operate in, and it has translated into positive numbers from KWAP. For the past 10 years, the average gross ROI for KWAP is 6.5%, which is higher than the Malaysian GDP of 4 to 5%. The average growth last year is 11.4% per annum, and you have an AUM as of last year at 125 billion. We are at the tail end of the year. Will the performance of 2017 be as superb as 2016?
I think it's only very marginal. What we did was that this year, we also did not want to put a stress on our portfolio. We probably will be achieving around 5.5 or maybe 5.6%. I think that's the likelihood at this point of time. But generally, this is a slightly better performance than last year, where we only hit about 5.37% performance, you know. Although over the last maybe 10 years, we have achieving above 6%, but generally that is because when interest rates globally was on the high side. Now that interest rates are lower, we will not be able to achieve the same kind of returns, because quite a chunk of our portfolio now, currently 50% of the portfolio is invested in fixed income, which returns are generally lower for the last few years. Does
the market need to brace themselves for a lower gross income for this year compared to the past 2 years? Just for the record, you've been hitting 6.2 billion in 2015, 6.6 billion or so thereof for last year. Are we expecting a lower amount of gross income for this year?
Oh, no, gross income, I think we will probably hit about 7.4 billion actually. And that would translate into an ROI of about 5.6%, and a TWRR of probably above 7%. And our fund size will grow from 125 billion to, we are expecting about 138 billion by the end of the year, which actually reflecting a double-digit growth in terms of the fund size.
There's a quick mathematics. My third year elementary mathematics tells me it's about 12 to 13%. I may be wrong here. But this is, again, a lot of comparisons are always being made to EPF. This is registering double-digit growth compared to EPF. Is it because of the lower base that you have? Just for the record, EPF has about 600 billion ringgit. You guys have now 140 billion ringgit.
You see, I think the biggest difference between us and EPF is that EPF has withdrawals and have outflows, whereas KWAP, as said today, there is no outflows. Even though we have been paying pension to the 700,000 pensioners, but that is from an operating account, which the money is given to us by Accountant General Office on a monthly basis. Our investment account, the one that has 137 billion, is untouched. And this is where we keep investing in long terms and keep generating returns. And that is why we can grow faster than EPF in terms of percentage.
We'll take a short break, but when we come back, we'll discuss a little bit more about emerging flow markets. Don't go anywhere. Welcome back to Market Talk. I'm your host, Ibrahim Sani. Joining me is Dato Kamaruzzaman, Ahmad, the CEO of KWAP, one of the two big fund managers in the country. Dato, I have here a graph that talks about the emerging fund flows into the country. If I can just trigger it, it basically shows that the appetite for foreign investors coming into the country is actually rising. This is as at August, but as we pull the graph towards the end of the year, the appetite for foreign funds coming into Malaysia is actually quite there. I just want to make two comments, and I don't know whether you can validate this. Number one, is it because the ringgit is actually low and therefore foreign investors want to come in faster? Number two, or is there a serious appetite of foreign funds coming back, foreign investors coming back to invest in this country?
I think it's a combination of many factors, among which obviously is the currency. The currency play has always been in mind of foreign investors when they invest in countries. But the other thing is, of course, is Malaysian stability and good economic fundamentals. And you can see that the fundamentals support it because of the strong GDP numbers. But generally, what happened in Malaysia is not just about coming into the our market. I think which market they goes in, and that is very important. You know, the fund flows has been coming in, yes, but the flows has sometimes been moving to the equity market and sometimes goes into the bond market or the fixed income market. And that is why in the first quarter you see that when the fund flows came in closer towards 9-10 billion ringgit equivalent, they came into the equity market, and the equity market just moved up nicely, you know. The index was up by nearly 7%. But in the second and third quarter, there's a little bit of profit taking and a little bit of shifting into the fixed income space. And that's where, despite, you know, the possibility of higher interest rates, as mentioned by at the previous monetary policy, the bond market remains quite buoyant, you know. And there are a lot of buying interest, you know, just because
they actually be enjoying your kind of statement right now, because the capital markets indeed, debt capital markets for that matter, indeed provides, while it provides lower returns as compared to other asset classes, it does provide robustness there. My question would be on private equity and other forms of asset classes. Do you think that investors are shying away from all these other asset classes?
I think those are investments that requires a little bit more high risk and a little bit more sophistication in terms of from the investor's profile. I think, yes, that we do see that a lot more interest there, but generally it's very small in terms of what the total funds flow are, you know, at this moment. They are basically restricted to those two basic asset classes, which is equity and fixed income.
How about yourself? Going outside, while I applaud the whole move of getting more foreign investments abroad, it may hit a lot on your investments there because of the low ringgit. How do you manage these rising cost of investing outside?
Okay, first thing is we still look at performance of the investments abroad and the investments locally. The investment abroad since 2010 has generated returns of 9.58, closer towards 10%, whereas the local investments are generating about 6.5%. So there's a nearly a 3.5% differential in terms of returns. And obviously, we would like to invest more abroad because the opportunities are out there actually. But for us, I think it's also not just a question of trying to divest as much as possible abroad. We still have to support the local economy and local opportunities. And then that's why we have to strike a balance, you know. And currently, there are some restrictions for us to invest abroad. But generally, we do understand that the national interest will have to come first ahead of KWAP interest. Yes.
I mean, while national interest may have to come first, this would impact your investment strategy and philosophy, for that matter, going forward. Will there come a time when you have to put your foot down and say, we have to chase the ROI? While it is romantic for us to invest locally, we have to chase the 10%, 9.5% returns.
Yes, I completely agree with you. But again, you know, we have to dig deep into our research capability to find, you know, companies within all the asset classes that we invested to get the returns. And I think obviously the opportunity is getting more difficult these days to find the gems in Malaysian market. Yes, later on, I'm quite sure we have to hit the wall, and that's where we have to really request for more overseas allocation from the authorities.
Pardon my ignorance, what is the split between local or domestic investments versus foreign investments?
At the moment, it's only 12.5% are abroad.
Okay.
So 87.5% are actually in the domestic market.
Of that,
so if the domestic market did not perform well, it is very difficult for us to perform.
Hence, it brought your average returns from 11.4% down to 5%.
Not exactly. Our average returns was actually, like I said, you know, average return for our overseas performance was closer towards 9.58% for the last 10 years. And probably the domestic returns was 6+%. So that 3 to 3.5% margin, I think this is where we have to need to be compensated, I think, later on.
Okay, let's talk about how you are managing your long-term risk, particularly the obligation that you have to manage, considering that there is a rise of Malaysians in terms of entering the retirement age. Malaysians are living longer. I'm sure as a pensioner, as a pension fund, sorry about the pensioner part, but as a pension fund, you get this question a lot, right?
Yes.
How do you manage that kind of long-term risk? Some other pension funds out there are buying long-term bonds, 50-year bonds, that kind of stuff to parry the asset management. How does KWAP look at things for this matter?
Okay, first thing is obviously in terms of investing, yes, we are also a long-term investor. So we are trying to put more money at the longer end of, especially the fixed income side, because that is where the yield are. You know, I think we have always been bullish bond, and that has paid off for the last probably since the subprime crisis actually. So that has paid off. But generally, in terms of the liabilities side, where people are living longer, and KWAP is expected to fulfill the obligations, you know, later on when the government asks us to perform that obligations, and that is where there is. In the first place, that we are trying to mitigate it by, of course, you know, looking at financial planning programs for our pensioners, maybe even for civil servants who just started into the job. Yeah, we're already trying to educate about the importance of financial planning.
There's also a lot of initiatives to get the new joiners or into the government service to opt for EPF rather than for KWAP. How's that coming along? Or pension?
I think that is a policy decision, and policy decisions is not the prerogative of KWAP actually. It is the prerogative of the government. But what the government has done lately has been trying to engage this with KWAP, because KWAP has probably is the correct institutions to get some feedback on this. What we have done, we have started taking over that pension payment since November 2015 to all pensioners. But like I said, the money doesn't come from our investment account. It comes from operating account, which was injected. But what we did was that we did a pensioners demographics. And that statistics is very vital. And then we did a liability studies, which is also very, very important for the government to understand that what is the latest size of the liability after what he has, given to civil servants in particular, like salary adjustments and, you know, other benefits that they have offered. So the thing is that we are the party that the government needs to engage when the government wants to introduce certain new things for the benefit of the civil servants.
The financial results of KWAP is actually very transparent. Everybody can read them, everybody can learn about your investment portfolio and stuff like that. But do you think that there is a time and place for us as regular Malaysians to understand better the kind of statements that you just made just now, particularly the pensioners demographic, the liability, particularly the contingent liability that the Malaysian government has? Do you think that these kind of information is vital for the public to know?
Okay, I completely believe in transparency and good corporate governance. And what we have done was that those studies we have undertaken, and we have shared this to our stakeholders. But the data does not belong to us. The data belong to our stakeholders, and it is up to our stakeholders whether they are willing to share with the public. But what we did was that we have made that available to our stakeholders, the latest numbers, and what our suggestions are how we can take this forward. But generally, like I said, these are, a lot of these are policy issues, and it's up to our stakeholders, which is the government themselves, whether they are willing to share. Like I said, we are we always adopt transparency as one of our...
that's one of the pillars of investment policy as well. KWAP does promote ESG, but we'll take a short break. But when we come back, we'll discuss a little bit more about household debts and how it's rising. We'll go ahead. Welcome back to Market Talk. I'm your host, Ibrahim Sani. Today I have with me Dato Kamaruzzaman, Ahmad, the CEO of KWAP. Dato, earlier just now you were mentioning that there is an initiative for you and in fact a political will on your end to actually educate the population out there to be financially prudent. I have here a chart that basically shows the rising household debt in Malaysia. It's actually quite known. We've known this fact for quite some time. We're in the high 80s. In fact, we're encroaching towards the 90 marker going forward. This particular chart will basically show the kind of various debt to GDP ratio mix that we have in our population right now. Again, these kind of facts and figures, while it has been with us for the longest of time, and with no immediate fix, do you think that there is a need for us to actually look at this number, very long and hard number, and try to address this once and for all?
No, the way I look at those numbers, obviously, is I look at it with a lot of concerns, because it is really very difficult to come down. You know, it's not coming down at all. In fact, in terms of absolute amount, obviously, it is rising. But generally, the only heartening thing to see is that it is not so much about other debts. There are a lot of it are residential debts, which is actually backed by assets actually. But the issue thing, I think, due to even personal financing is quite high actually, and that reflects that's a worrisome numbers for me because it really reflects that most Malaysians do not have enough savings actually, and because of that, I think they have to resort to personal financing, and you can see it's a thriving business. Bank Rakyat, MBSB, and so many others who provide personal financings, and they are all doing very well in terms of their bottom line.
30% interest per year.
That is, I think, my biggest concern when I look at that chart, actually.
Okay, and so, like I said, this is boils down to the whole question of Malaysia being stuck in this middle income segment. We're heading towards the election year. Do you think that the aspiring parties, the government or the opposition, they really need to address this economic issue on trying to have a better economic policy on making us slightly better in terms of income? Yeah.
I think, politics aside, I think now the government as well as the oppositions, I think they do understand that the focus is actually on the Rakyat actually, and I think the Rakyat will get the upper hand or will get the attention in this coming election, and I think basically it is about trying to serve the Rakyat, and I think like I said, this coming election, you will see that the Rakyat will be the biggest beneficiary, because I think previous years politicking among each other and has always probably the Rakyat was worse off in that in this previous election, and now the Rakyat is back to be the focus point, and I think the Rakyat will benefit. So people, all the parties, I think, will be looking at the Rakyat itself, trying to enhance the well-being of the Rakyat.
Dato, I want to ask you a very important point right now. It's about Bitcoin. Now, I know this is quite interesting on your end because you don't invest in Bitcoin, but the Bitcoin prices have risen quite considerably. I have a chart here that basically shows Bitcoin price going astronomical from 9,000, 10,000. I think now it's 19,000. We just have that target. Yeah, we just don't have a space to put the prices up there. What do you make of this?
No, I think, of course, for us, it's not our risk appetite to be investing in Bitcoin. But generally, it is mind-boggling to see a sort of like a stock, having higher GDP, higher valuations than the entire economy of New Zealand and many other countries, and it's even beyond the reach of higher than the Warren Buffett and the value of Warren Buffett, and so on, actually. But the reality, obviously, is that people are chasing it up because I think it's something new. It's something that they think probably will continue to gain a lot of traction at this point of time. And when it is new and it's the early birds, I think these are the ones that investors are going after. But really, it's only for those with that kind of appetite, not for the weak heart and not for institutions like us, actually.
Dato, thank you very much for joining us this afternoon. I was speaking to Dato Wan Kamaruzzaman Wan Ahmad, the CEO of KWAP. That wraps up this episode of Market Talk. Be ready to download this episode on wherever you get your podcast, as well as the Google Play and Apple App Store on the app. Download our app there. I'm Ibrahim Sani. Thanks for watching and goodbye.
Thank you.